Thanks for joining us today on Market Call. I'm Morello Fernandez. Keith Richards on the show with us today. He's President and Chief Portfolio Manager at ValueTrend Wealth Management. They'll take your questions on technical analysis. Here's how to reach us. 1-855-326-6266. If you have a question, you can email your question in as well. Market Call at BNNBloomberg.ca. Keith, good to see you. Thanks for coming in.
Yeah, my first time in the new studio.
Your first time in the new studio. Welcome. So the key North American markets up, TSX, by the way, 300 points plus on the hour. Are you concerned about a correction at this point?
Well, the markets are temporarily overbought. We are coming into November, which often is leading into the better part of the year, although this summer has not been bad at all. So how do you use seasonality?
How do you translate that?
Yeah, how do you translate that? One of the issues I have right now is that, yes, there's some potential short-term risk just coming into the, am I going to say it? Is his name XI? How do you say the Chinese leader? It's Zhao or Zai or something? Anyways, the China and Trump meeting coming up at the end of the...
President Xi Jinping, yeah.
Xi Jinping, okay, thank you.
I was like, what?
I just know how you spell it. Whatever the case, they're meeting at the end of the month.
Yes.
That could cause some volatility. The markets are a bit overbought, probably more than a bit overbought. Maybe that'll cause some pullback. Maybe it won't. I don't know. But one of the talking points I wanted to mention is something I've been blogging about a lot lately, is that I've been in this business for 36 years professionally, and I was trading on my own for a few years before that. So I'm going to say 40 years of staring at stock charts. And I know the signs of a bubble, and we're in one. But it doesn't mean that it pops tomorrow. So I think I just wanted to emphasize that we always have that at ValueTrend in the back of our mind, that we're going to play the trend. It's all fine, but we have a certain level of caution.
Are there indications that you look for as to that bubble being closer to popping?
Yeah, I mean, I did write a big blog on it, and you know, people can look up my website and look for something that says, you know, when will the bubble pop or something like that. But basically, I'm going to nutshell it, that we look for, if breadth gets narrow, it did. AI was all the focus. If volatility gets low, you can see that on a chart right now. If you look at the S&P 500, the swings, which were very naturally moving up and down until just really this year, they're very tight. We hardly get, you know, down days more than a couple, 3%, and then they pick right back up. So that's another sign. We also look at sentiment indicators that tell us that the crowd is becoming too enthusiastic, although they're not at the same levels when bubbles actually pop. They're just getting there. So all the intel I have, and I go in more detail on my blogs and stuff, but the intel I have is that we're in the final inning, although we may be, you know, another, who knows, 6, and you don't want to fight the Fed. So long as the Fed is pushing, I think we're going to stay going up, but it'll be, at some point, there's going to be a day of reckoning. Let's just put it that way.
Got it. All right, we're going to take a quick break. We'll be back with Keith Richards, ValueTrend Wealth Management. He's taking your questions on technical analysis. Here's how to reach us. We're back in a moment. Welcome back. Thanks for joining us on Market Call. We're going to an email from Niall. He says, what's happening with Dollarama? I haven't had a chance to pull up the chart here, but what is going on with Dollarama? Is it one that you invest in? Is it one that you watch?
Well, we watch a lot of stocks, and Dollarama I've looked at it recently. I mean, remember, I'm a technical guy, but I can give a brief summary as to what I believe is happening. Dollarama will be affected if Trump doesn't do a deal with China, because that's where they get their stuff, right? It's a lot of Chinese-made goods, right? But that's as far as I'm going to go on the fundamentals. The other thing that we got to look at is the charts tell us everything we need to know. So there's my bias, but you know, uptrend on the chart, and then here's this arc off the trend line is considered a bit of a parabolic move. And you're seeing the S&P do that right now too, which is hence the beginning of the show conversation. So I don't know what the 200-day moving average looks like from here, but I'm going to bet that there's a fair distance between the 200-day moving average and the you know, the recent peak. And whenever it's around 20% or more, I tend to call a stock overbuy. So I just think it's, at this point, it's got a reason with the Chinese goods, but it also has a reason because it was overbought to pull back. So that would be, but the longer term trend is good.
So 20% over the 200-day average is what you look for to determine that it's overbought.
Yeah. I've written a bunch of books, and that was one of the rules that I always talk about in my books is how do you tell when a stock is getting near the end of before it does a pullback. Doesn't mean the trend is over. So
okay. Let's get to the phone lines then. Deborah's on the line. She's calling from BC, Okanagan Falls. Hi, Deborah.
Oh, hi. Thank you for taking my call. Kate, today my question is on MDA. I missed the low at $31, and you can't see this on your line chart, but obviously there is a significant gap when it dropped from the high of $48 after losing the contract. Could you please give me a read on this chart, and do you see that gap filling, and what would be a good entry point?
Okay, so MDA makes low orbit satellites. They've got a huge backlog. We know that.
Yeah.
And they lost a contract a few weeks ago that has brought the stock down, and it sort of seems to be simmering around $35 at this point. What do you see when you look at this?
Yeah, and actually we did take a look at MDA recently, and it's on our watch list. So interesting that Deborah would call in. This is a cup formation. Rounded bottom, whatever you want to call it. The cup formations do handles. There's your handle. It's perfect, right? This is a perfect formation. Then it went crazy. It went parabolic, just like the last chart we looked at. It needed pullback, and then of course it loses its contract. I always say markets are like balloons that get blown up too big, and then they need the cufflink, like I wear, to burst. And everybody blames it on the cufflink or the pin, but it was blown up too big to begin with. So this is what's happened to MDA. It gapped down, like Deborah was saying. I think it'll pull back to the old support level on that handle, which is near 30.
Under 30?
Somewhere near 30.
Okay.
Let's just use round numbers. So it might get there. But other question was, will the gap be filled? That's a generalization. Gaps mean that there's extreme fear or extreme exuberance. And often that fear is filled later, or the exuberance is filled to the downside. So probably, but I think it could test the 30 area before it's over.
Okay, so if she wants to buy in on that, she might have an opportunity.
And I might be
to do
joining her on that because I like the stock. Yeah,
okay,
so.
Let's go back to the phone lines. Anne is on the line. She's in Scarborough today. Hi, Anne.
Good afternoon. Keith, you are such a spiffy dresser. However, may I please have your technical analysis of CAE, and do you foresee it as having a long runway? Thank you.
Okay, we'll pull up CAE and have a look there at the chart. What do you think of CAE?
Okay. So CAE, another great company here in Canada, bit of a point of resistance that was there since 21 or so, broke it. And that's great to see, right? So we always look for breakouts. Breakouts mean that whoever was selling in here, whoever didn't like it, right around whatever that is, $40, or I should clear the screen and that way I can see it, $36 or whatever, they're gone. So those people have been taken out. So now the market can move on to newer highs. It's doing that. Sure, it's not, it's good. You're going to get this kind of stuff, which is healthy. That means it's not parabolic. And on this chart, it looks pretty good. I would say that's a good looking chart.
Okay, let's go back to the phone lines then. Chris is on the line. He's in Victoria, BC today. Hi, Chris.
Oh, hello, Marilla. Great to see you back. Roger was great, but it's great to see you back.
Thank
always, you. Marilla. You do a phenomenal job. Keith, I'm wondering if I could please have your opinion on Algonquin Power. It's obviously had a very rocky 5 years on the charts, but I'm wondering if you see sustained long-term recovery. It's been recommended lately by some of the other managers that I follow, and I would love to have your technical analysis on it. Thank you so much. Have a great day to the both of you.
Okay, thank you. We'll pull up Algonquin Power now. It is up a little on the day at 847. That is a big fall off, I guess, late 2022, start of 2023.
And actually, we run an income platform. We have two equity platforms and an income platform. And in the income platform, we try to buy stocks with dividends.
Sure.
And we owned this a while ago. And, we follow these rules to say, look at if major support is broken to the upside, like the last stock we just looked at, MDA, I think it was, we said, okay, that's a breakout to the upside. But if it breaks to the downside, we count a couple of weeks or so.
CAE
and we're
it was,
out,
I think.
Right?
Yes.
So that's, CAE, sorry. So that's happened back in 22. And then it, did what a lot of breakdowns do. It's like tried a couple of revivals. What it's doing right now, we look for peaks and troughs. So I'm going to clear the screen. Trough, lower trough, peak, lower peak, lower trough. Okay. So what you maybe have here is a higher trough. Okay. But now we need to take out this last peak, which let's call it $9. Okay. So if the stock moves above $9 from a technical point of view, it's telling us that these people that didn't like the stock here and were selling it there are being taken out, just like I've mentioned in the past stock. So that would be a positive sign. At this point, I would probably not buy it at this point, but funny enough, I would buy it higher.
You would buy it higher?
Yeah, because then we've taken out those people at $9.
And so you think it's going to have more of a resurgence at that point?
Yeah, that's right. Yeah.
Okay. We hope that helps out, Chris. We are going to take a quick break. Keith is sticking around to talk to you about technical analysis. You can call in, you can email. Here is the information to do that. We're back in a moment. Welcome back, and thanks for joining us. Let's go to Susan on the line from Quebec City. Hi, Susan.
Oh, hi. Good afternoon to both of you. I would like to start a position on either. I can get both either Oracle or Amazon, and I cannot make up my mind. I'm reading about both of them, trying to do my own due diligence. Hopefully, Keith can point me to the right direction. Thank you so much.
Okay, thank you for the question. We will try and pull up both line charts for the stock. I also wonder, and I know you look more at the patterns than anything else, do certain stocks get to a point where you won't invest as a value investor because you think they've just gone too high?
Yeah, well, that's half of our company's name, right? It's value and trend, right? So trend is the stuff I do. But Craig works with me. He's our vice president, and he's a real value guy, CFA. And we specifically don't want to buy overbought things, and overvalued things. Now, that can work against us. I mean, stocks get overvalued. Look at NVIDIA, and stuff like that. They just keep going. It doesn't matter because the market builds in beliefs or whatever of that future value, right? So that's the price you pay. So, I mean, I don't have any comments on these stocks because
sure.
I'd ask Craig.
Okay, let's have a look at the line charts and tell us what you see we'll pull up Amazon first if we can and take a look at where it is. So it's sitting at 214 today. Look at that incredible upswing from 2023, and then that come down, I guess, at the midpoint of the year or April of this year.
So keep in mind that we are seeing the Amazon fail. I did a recent video on how a lot of the leading stocks, like the Metas and Amazons and them, that the AI and the FANGs,
the Tech 7,
are starting to not perform as well as, in other words, the breadth is broadening out. So you can see this in Amazon. I mean, the S&P's at new highs, right? But not Amazon and not several of the others, by the way. So that could be a double top. I'm just keep in mind that I'm not saying it is, but you have two peaks where it failed, right? Pretty much the same point within a few dollars. So if this would be a neckline, because that's an old point of resistance, became support. If this stock pulls back to here and bounces off, then you're probably in a consolidation where it'll do that for a while. But if it breaks, look out below.
Okay. And where is the next breaking point? I'm trying to figure out sort of from that chart.
Yeah, it's hard to see, isn't it?
It's hard to see what
do you want to call it? 180, 190, something like that. I mean, I'm having to guess.
Got it. All right. Can we pull up Oracle as well? I just want you to have a quick look at that one since she's comparing those two for an idea where she should put her money or if she should maybe split it between both. Okay, so here's Oracle, much more of a gradual move over a number of years, that same dip in April and then moving up.
And then it did that, parabolic move. So it's although, I will say that now it's in an uptrend. I mean, it was in an uptrend before, but now it's moving up. It's done some nice, little pullbacks, and I would say that I would probably, if I had to choose one, put a gun to my head sort of thing, Oracle. But if Amazon does manage to bounce off of that support level we were just looking at, we're calling it 180, I don't know really what it is, then you would say, okay, I could trade that range. You could buy it at the bottom and just sit on it. So two ways of, that's the way I would look at both of these stocks.
Got it. Okay. Let's hope that helps out, Susan. We're going to take Mark, who's calling today from Ottawa. Hi, Mark.
Hi, my question is on United Health. If you could give me your technical analysis. Thanks.
Okay, so United Health, one of the beaten down healthcare stocks in the U.S., and has really had a lot of trouble coming back up, right? So it's down here at 364. You saw it at 600, I guess, at the end of 2024. And, it's bumped back from the bottom. But what do you see here?
Well, it's interesting. I kind of wanted, when I heard that this was a stock on the list, I wanted to talk about this one because we run these two different equity platforms. One of them we call our aggressive strategy. So we don't buy stuff that we would buy in our more conservative platform.
Okay.
And United Health, we have not bought it yet. I don't think we have anyways, but I'm pretty sure we have not. But it's on our buy list. Like we it's an aggressive stock. So keep in mind that there's a big difference between a safe haven buy, which United Healthcare used to be, but now it looks from a technical perspective a little aggressive. So maybe we could look at a 1-year chart, but while I do it, just quickly, it looks like it's broken from the bottom, and it did a little bit of a reversal, taken out. So yeah, here we go. So this is like a 1-year chart,
okay,
and maybe it's breaking out. Like it's really early. I don't think we've bought it yet, but we are very interested in this stock because if it manages to hold, and it's not showing much life yet, but if it started doing this, going up and down in a nice little trend, there's tons of upside on it. So at this point, we're interested. I would say it's good for an aggressive investor.
Well, how do you define aggressive for your firm?
So, I mean, this stock probably doesn't have a ton of downside. It could, what could it do? It could get down. Well, it's, I guess, pushing 400 now. It could go down to that 300 or whatever it hit. So that is a good downside. But you kind of know where you're going to sell it if it doesn't work out. All right. So it's just, is there an impetus? Is there a catalyst to push it forward? Now, I did speak with Craig about it. He feels that there's a potential catalyst, but there's also enough roadblocks on the company. So that's why we said, well, if we buy it, we would only buy it in the aggressive platform.
Okay. Let's get to Michael, who's calling from Vancouver today. Hi, Michael.
Hi, thanks for taking my call. My question's on Tesla. There's been a few risky investments from Elon Musk, but I was interested in shorts, but the big tech players came from out of nowhere. It didn't quite cover the whale. Therefore, is it a good investment? Thank you, Tesla.
Okay, thank you for the question. Is it a good investment, I think is what I made out from him. It's a volatile one.
Yeah, it is.
It moves around a lot. It's at 446 today, up 1.7%. But do you invest in stocks that move around this much?
No.
What's your...
It's not so typical. I think the word investment means, can I buy it and hold it and, make money on it, right? The answer is, this is more of a trader. Now, it's great as a trader. It's like wonderful. You just, if I was trading this one, I would be looking at momentum indicators, look for overbought and oversold and technical points of resistance and stuff like that. It's recently broken out. Maybe that's good. Maybe it's not. But it worked out to new highs here and then fell like a brick. So this is not an easy chart to read for an investor. It's more I would just trade it. That's just me, though.
Okay. Are there other stocks that look like the Tesla stock? I ask because this one is so volatile and moves around so much depending on so many other different factors. You ever see anything else? Or are there certain sectors that trade more this way?
Well, there's a lot of stocks that we do trade. See, Tesla I would find hard to trade, but and that's why we don't trade it. But there's a lot of stocks that we actually go in and out of all the time. And they have, just to put it in someone's mind, so there'll be a tight range that you can identify. We call it a swing pattern. It'll go from here to here, and then somewhere around here it reverses and goes somewhere near the bottom again, and up and down. And there's lots of stocks that do that. So yeah, I will trade swing trades, but Tesla's a little bit more difficult to trade.
Got it. All right, we're going to take a quick break. We'll be back with Keith's past picks. That's coming up. Stay tuned. Welcome back. Time now to take a look at past picks from Keith Richards, starting with August 27th, 2025. So just a few months ago. At the time, you picked Northwest Healthcare REIT, NWH on -U on the TSX. So it was $4.95 at the time, up to $5.02. So a little bit of growth there. It's only been 3 months. 1% return, 3% total return. Is this something you've stayed invested in, and what do you like about Northwest?
Yeah, well, first of all, we were just based on some of our risk parameters. The market wasn't risky this summer, but our parameters that we used were signaling that there was more risk than normal. So we held lower beta, higher dividend kind of stuff over the summer, and this was one of them. I mean, you're not going to get much out of a REIT normally anyways. So we bought the REIT ETF, which did really well. We sold it just about a few weeks ago, right at the top of its trading pattern.
And you bought that in the summer?
Yeah, we bought like 3 REITs. Okay, so one was the ETF and then 2 individual REITs. And this is one of the 2 individuals. You can see August, good. It was okay. When I gave the recommendation, it was a good time to buy it. It pays a darn good dividend. And it's swingy. There's a low there, there's a higher low there, and there's a higher low there. I'm probably going to be out of this pretty soon. So I would say that if I was watching this, would I say recommend buy it now? Probably not. I think that, I'm going to let it swing up for a few weeks if it does and sell it, make a little bit of money and make a little bit of dividends and say goodbye.
Okay, let's get to your next pick from August, end of August this year. Tourmaline oil on the TSX. $58 at the time, up to $60.39, a 4% upside and a 5% total return. They do natural gas. Yeah. And natural gas prices have been a little bit depressed. Yeah. When did you buy into this? Did you buy in before August, and are you holding on to it?
We've been legging in to this a little at a time for better part of a year. So actually, I want to maybe put up a bigger chart, like maybe a 3-year chart or something.
Okay.
And the reason is because we were just talking about Tesla, and it's all crazy looking chart. This is one of those swing patterns that you can actually trade. So Tourmaline, so we're going back to 23 here, and looky here. That's pretty rhythmic, right? So you can buy it, let's call it somewhere near 60, and it's touched on that, it's come close to that, several times, and you can sell it somewhere near, let's call it 68 or something like that, 70, And if you're doing that alone is okay. You're making a few dollars to trade it. Eventually, it'll break out. So we have a longer term perspective on this stock. So we haven't been selling it at its peak, but we do buy it when it gets to the trough.
So you're adding as opposed to trimming any of it.
Every time we see it get down to that low end of the rhythm, we buy a little bit, like 1-2%, So that's with a lot of our nat gas, because we see nat gas over the 3 to 5 year period as a bullish trade.
Okay. Let's get to your next pick from August. Weatherford, WFRD on the NASDAQ. And they do oil services like equipment, gas field services, that kind of thing. 63.68 US at the time, 63.85 right now. So a 1/4% up for total return and return. Are you holding on to this stock? Tell me
so
why.
We're doing this short-term stuff, which a lot of my trades are very short-term. So, but this one again, because we do have this belief in energy, not necessarily oil itself. This is a driller more than anything, and they're fairly sophisticated drillers. They're kind of leading-edge technology company within the drilling space. It's an uptrend. Sure, it's paused out for now, but the trend is going the right way. And if it even gets close to its previous highs, that's $80-$90. I think that's a real possibility over the next, again, 3-5 years.
Got it. Okay, we're going to take a quick break. We will be back with Keith Richards answering your questions. Keith is with ValueTrend Wealth Management, and he takes your question today on technical analysis. Back in a moment. Welcome back. Thanks for joining us. Let's go to Paul on the line from Orangeville, Ontario, with his question today. Hi, Paul.
Yes, energy fuel has gone parabolic, and last week in 2 days it jumped $10, then it back down on Friday a little bit. It went down to 37 from 39. What does you think about that at the moment?
Okay, so they are a uranium producer.
Yeah.
And they did go a little bit nuts after that April point, and they've gone steady up. A lot of people are looking at a demand for energy and sort of what that looks like for nuclear moving down. What do you see when you look at this chart?
Yeah, I mean, when it comes to uranium, we've been on the uranium trade, before it was cool to be in uranium. We've been there for a couple of years now, and it's done well. It doesn't matter almost what you bought. It is. Paul is correct in identifying this as parabolic. It's like So, and even like we own chemical, and even it paused for a while, which I like to see. It's healthy. This guy needs to pause a little bit. So that's my only 2 cents worth here, is that you can't argue with the big breakout. They always say the bigger the base, the better the case. And that's been proven. It's just gone ballistic after it broke out. But it's parabolic. I don't have all the indicators in front of me, but I can tell you this is overbought. It would be really healthy for this stock to do this, okay?
Yeah.
And then break out again. That's what I would love to see. At this point, I would expect that to happen.
And if he's already bought in lower and riding high, he should just sort of wave through that?
Yeah, probably. I mean, unless it really starts to peel down,
Yeah.
You're going to have to figure out your own uncle point, because there's no support points I can show you on the chart. Say, it'll go here.
That'll indicate.
It'll do what it does.
Okay. Let's get to our next caller. Bob's on the line from Regina. Hi, Bob.
Good morning, Marla and Keith. The question is on AEM, okay? And basically what I'm wondering about, it's got a PE ratio now of 23, and the forward is 19. Just wondering from Keith and you, Morello, is that good or questionable buy? And sort of his technical analysis on that?
Thanks for the question. Do you tend to factor in at all the valuations, or do you stick?
Well, we do have the two parts to ValueTrend. Okay. Craig is a CFA, and he's a value guy, like I was mentioning. He does all that, and he has his own way of looking at it, just like I have my process.
Analysis,
and so I can't comment so much because I won't have Agnico Eagles, but I can. The great thing about being a technical person, I don't even have to have looked at the company before. I can look at a chart. I mean, yeah, it took off with gold, like surprise, like everything did. Gold was flat. The producers were kind of flat, and then they broke out. I have been saying for a while that the gold producers in particular, I always said the gold producers were the place to be. And earlier this year, I said get into silver because it had some catch up.
It'll follow, yes.
It did. But now they are overbought. We're still in the trade, but we have peeled a bit out. Not that we're out of the trade. But you can't expect it. If people think that things are going to keep doing that, I got some swampland in Florida to sell them, because it just doesn't work that way. You get pullbacks, and it's healthy for the stock. I would expect that this stock and the gold sector will do that.
Okay.
Pullback.
Let's get to Cindy. She's calling from Grimsby, Ontario, with a question. Hi, Cindy.
Hello. How are you?
Good, thanks.
My question is regards to First Majestic Silver. It was dragging for quite a bit. Now it's slated to turn a profit through 2026. So I was wondering, in terms of the technicals at this point, because it's made a great gain in the last month or two, what your thoughts are.
Okay, so you had mentioned gold shooting up and maybe needs to go a little bit sideways. Silver, you said, caught up. And it looks like Majestic has come off of its high. So it's at 1994 here. And then I'm wondering, would you trim at this point? I mean, it clearly had a much higher high way back in 2021, I guess.
Yeah, it depends on how much exposure you have to it. So Craig and I, we just did that on gold I mentioned, and we said, okay, we took some out, but the keyword being some out, because you don't too much argue with the trend. And to your point, Marla, there's more potential upside to get to the old highs, maybe $23 to $24, $25, something like that. It could get there before it sees any real trouble. But if I had like 10% of my portfolio in this stock, I would probably be trimming big time right now just to get it down to a reasonable level. So I think this is more of a judgment call than a technical call at this point. So.
All right, let's get to another caller. We have Kevin, who's calling from Orillia, Ontario. Hi, Kevin.
Thank you for taking my call. Keith, I love your ValueTrend blog. I read it every week. It's extremely informative, and I thank you for that. My question is on Canadian natural resources. I know that it moves with the price of oil, and I'm not sure if you're bearish or bullish on oil. It's kind of back and forth. I know that you've been bullish on it lately, but if Russia comes online, if that gets resolved, so I'm not sure where you see the stock. Where would you buy the stock? At what price you would say, okay, I'm buying it regardless of where the price of oil is? Thank you.
Okay, thank you for the question. Obviously, OPEC has turned on the taps, and there's been concern about oversupply there and what China's going to pick up here. So where do you stand on oil today?
So we're actually more bullish on natural gas than oil. We've been saying that for a while. And by the way, Kevin, you're from Orillia, I'm from Barrie, so we're neighbors. So where would I buy it? Like, we don't hold any actual oil stocks. We have the driller that we just talked about, Rutherford, but we don't hold any. We have tourmaline, which is mostly gas. We have a mixture, but it's kind of.
So you don't own any straight oil.
We don't own any straight, and this is more of a. I think they all have some gas exposure, but it's hard for me to like oil stocks given the news we're talking about. But it's been like this for a while. Like oil has been in a downtrend. Maybe it's basing, and that's maybe a good thing for C&Q. It's finding some support, interestingly, but here it is rounding over again. I can't really say that I would buy this chart. So because when we looked at the gas chart a while ago, the tourmaline, it was like this. So you just
up and down, yes.
Bought the bottom, sold the top, or whatever. So this is more of a downtrendy looking thing. It may be reviving, but I'm only giving this a 5 out of 10. So
5 out of 10. Okay, we're going to take a quick break. Keith is sticking around to take your questions. We're back in a moment. Welcome back to Market Call. Let's go to Frida on the line. She's in Chilliwack, BC. Hi, Frida.
Hi there. I'd like your thoughts on Shopify, please, and what you think down the way. Thank you.
Okay, thank you for the question. We will pull up Shopify, always a moving stock. It tends to be a little bit volatile as well. Mm-hmm. When you look here, so bounced off that low in April, it's been going steady ever since. It got up to what? 153 in sort of the summertime. Is this a stock you look at or invest in at all?
We actually held it, and this is interesting because that was our target. Now we pick a target and then say, what are the odds of it going through? Who knows? So we will sell. So that's actually, we were buying it like a couple years or so ago and traded up there, made good money on it. We sold it, and then it blew through that. So funny enough, coulda, woulda, shoulda, but we follow our discipline, and that's all you can do, right? So now that it's taken out the old 21 highs, which is old resistance, so it doesn't have as much significance as, say, back here in early 25. But that's a breakout, and that's bullish. So I'd say there's nothing wrong with this stock. Just keep owning it.
Just hang on to it. Okay, let's go to Jay then. Jay's on the line. He's in Ottawa. Hi, Jay.
Yeah, hi. Thank you for taking my call. My question is on Netflix. I know the earnings are coming tomorrow, so I'm thinking about taking a small position and see if I can make some profit on it.
Okay.
Thank you.
Thank you. Let's pull up Netflix, which has done phenomenally well, right? Their growth has been pretty strong, and they really have beat back a lot of the other streaming services. Considering. Let's pull up the chart and have a look at where they stand today for Netflix, please.
So we'll look at maybe the longer term right now, but then we should look closer because I think he's asking if this is a good time. So it's an uptrend, you said. Kind of there's one of those parabolic moves off the trend line, pulled back. It's starting to build a little bit. So if let's look at maybe a 1 year or something like that. And we can kind of get a flavor for what this, there we go.
Okay, and the high was 1339, I guess, which was the end of June?
Yeah,
okay.
yeah. So, it went up, there's the strong move, pulled back, now it's kind of basing. And that's okay. Craig and I never bought by the day before earnings. Now, sometimes that can be okay. We were saying that earnings are coming out on this stocks?
Yes.
Yeah. So we wouldn't buy just because you can get nasty shocks, but generally with Netflix, you don't. So it's up to you if you're going to buy the day before or a couple of days before earnings. But I would typically wait to see if it could break this little consolidation. It's, again, buying higher. People sometimes think, why would you buy higher? You can either that or you buy right at the bottom of the little trading range it's in. That's not a bad place either. So I'd say it looks like it's constructive so far.
Okay. So, and I believe earnings for Netflix come out tomorrow. So this would be just under the wire for that, hoping for a boost from there. Let's go to Carolyn. She's in BC with a question. Hi, Carolyn.
Good morning. My question is on Power Corporation. I'd like Keith's outlook on this. Would he buy it at this moment in time? Okay. And I'll hang up and listen.
Thank you for the question. We'll pull up Power Core right now and have a look at that.
Okay. So, yeah, it's a pretty safe company. I mean, they have different financial entities under their wing. It's in an uptrend, but it's not parabolic. Moved out of a base, kind of one of those rounded base looking things. It's just a great looking chart for, you may not be the next Netflix or NVIDIA or anything like that, but if you want a steady Eddie, it's certainly proving to be so. Just, you would use little dips, and it doesn't do big dips, but little dips has great opportunities to add more to your portfolio, but I wouldn't be selling it if I held it either.
Okay, let's get to an email then from David. David says, what's your guest view of Salesforce? Obviously, a lot of talk about Salesforce had very strong earnings in their last report, but there are concerns, AI, right? Whether or not AI is going to eat into some of their business. That being said, they're countering that. But what can you tell from a chart like Salesforce? We'll bring that up.
Okay. Yeah. So first of all, volatile.
Yes.
So that's that. Having said that, there is some support. You can see it. There's kind of an old resistance level, and that became a new support level. That
240-ish?
Yeah, let's call it 240-ish. And that obviously it bounced off that first time, and it looks like it's bouncing off the second time. So, I was talking about charts that are hard to read versus easier to read. So long as this maintains this bounce, I would expect it'll test at least $300 again. So I would say, yeah, it looks all right. There's more risk with the bouncy stock like this. That from a chart perspective, it's a volatile chart, but you're looking at so far so good, bounce off of support. So
okay, the high, by the way, was the end of last year, so December of last year when it was at 367.87, and you think it could reach the 300 mark again?
Easily, yeah. I mean, so long as this bounce is real, but it looks to be. Yeah.
We are going to leave this block there. That's all the time we have for phone calls and emails. But we have new top picks from Keith. We're back in a moment. Join us tomorrow on Market Call. Gordon Reid on the show, President and CEO of Good Read Investment Counsel. He'll take your questions on U.S. equities. And if you missed Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for new top picks from Keith Richards, beginning with iShares MSCI Japan ETF. So it's EWJ, and we're going to talk about it a little bit now. This mimics, of course, what's going on in Japan, and quite closely from the chart that I looked at that was comparable. How long have you been invested in it? What do you like about investing in the Japanese market?
Well, we because we see the North American markets, Toronto too, TSX is also quite overcooked, I could say. So we've been divesting into foreign markets. We bought Japan. We've had some emerging markets. We got a lot of different positions outside of Canada, United States. And Japan's a major market that you can buy into that is in an uptrend. Fiscal stimulation, all that stuff supports it. Just doing what I like a stock to do. I don't like when things go parabolic. So this is, it settles out, breaks out, and over and over, settles, breaks out. So it's a good-looking chart for us to hold as a diversification outside of North America.
And is that a new pick for you?
We've been legging in. We like legging in. We never just go, that's 5%. We go like 1.5%, 2%, something like that, and we wait, and then we buy some more. So we've been doing that for the better part of this year.
Okay. Let's get your next pick, which is Alcoa AA on the New York Stock Exchange. What do you like about Alcoa?
Well, anybody that reads my blogs and videos know, especially my blog readers, I really, really like commodities. And we think there's a major commodity secular movement happening. And it started happening a couple of years ago, actually. And so we see the rotation within the different commodities. You saw gold and silver pop. You've seen uranium pop. We're seeing rare earths suddenly catch a bid. Base metals are one of those things. Because, when you talk about all this stuff like AI and robotics and magnets and all this stuff, all that stuff involves either base metals or rare metals, right? So Alcoa is a base metal. The aluminum trade was kind of soft for a while, but it's picked up, especially because there was a aluminum smelter down in the States. I think it was bombed, or I don't know the whole story. But whatever the case, we weren't buying knowing any of that. We just like base metals. We've got like a lot of exposure to different base metals.
The tariffs and the fact that there might be less buying of aluminum as a result, does that bother you at all?
It's again, a lot of these base metal companies are in the States, and so they'll be using their own metals. But it's an internationally traded. So like robotics aren't just being made, and AI isn't just coming from the U.S. Computer power, all that. It's China. It's everywhere. It's all across Europe. So these materials will be used everywhere. So we like
the
metals.
demand.
Yeah, we like the demand.
Okay.
Full stop.
Let's get to your last pick, which is cash.
Yeah.
And why are you holding on to cash at this point?
We have been holding cash all summer. Now you could say, well, the market's gone up. Yeah, because we use quantitative measurements. Like we can have opinions all we want, but one of our measuring tools is called the barometer. And again, I report it on my blog every month. It's been very accurate in the past. In fact, I've been tracking it for 15 plus years, almost 20 years. And it generally will tell you if there's more probability. It's a risk parameter reading. It's not supposed to be a market timer, but the risk has been higher this summer. Whether the market went up or not, because the market could go up or could go down. But you're always sort of like crossing a street, right? If you're crossing the 401, that's dangerous. If we want to run across the 401, crossing your local neighborhood road is very low risk on a relative basis. You still could get hit by a car, and you could still make it across the 401 here in Toronto alive.
Untouched, yes.
Then, but it's the risk you're taking, right? So our risk parameter went just one above full on, high risk. So it's been fairly high risk. So we've been holding cash for the summer. We will probably be moving out of cash in the next couple of weeks, especially coming into the China-US meetings. Something will probably eventually be resolved, and then we will be fully investing.
And percentage-wise, how much cash do you hold on to?
We have been anywhere between 20 and at one point 30, but generally speaking, hovering around 25, and that's a lot. And yet we've kept up with the market just by owning all these gold and metals and stuff like that. So we've had 25% less risk, and yet made the same return as the market or close to it. And that's just the way we roll. Like if we follow our system, if it says high risk, we hold cash.
Okay.
Most of the time, it's the correct move, but this summer wasn't.
and quickly, what feeds into your barometer?
Oh, okay. It's got a number of different broad categories. So there's trend, which is up. So that's been a positive. It's got breadth. It's got breadth momentum. So breadth is, what participation, that had been pretty lousy, right? It had been all AI and stuff.
All tech heavy, yes.
Yeah. So it uses sentiment. So each one of these is a number of different indicators for each category, right? It's got valuations, okay? And then finally, seasonality. So seasonality will go positive in November. Valuations are still terrible, right? Like if you look at trailing PE on the S&P 500 stuff. So it all comes together in one big lump, and it presents whether it's high, medium, or low risk. And right now it's in the higher, although not outright run for the hills category.
Got it. All right, Keith, Richard, got to leave it there. So thanks for coming in.
Yeah, good to be here.
Good to see you. And we will bring you Market Call again tomorrow. Thanks for joining us today. We'll see you later.